Welcome to Cameron Academy and the presentation for calculation of a percentage and a variable lease. Let's start with a percentage lease. You'll find that percentage leases are very common for shopping malls and outlets and so forth. And what's interesting about percentage leases is they charge you not only a price per square foot, so depending on the size of your unit in which you're operating, you might pay more or less as a base rent, but then they also charge you a percentage of your sales received by doing business on that property. I know it's a little bit wild, but it's a very common practice, once again, for shopping malls, outlets, and other types of retail shopping properties. There are 3 basic steps to solving this type of problem, and let's go through each one of these steps together so you can better understand. Step number 1, calculate the base rent. What's interesting about this is they want you to calculate a base rent for the entire year. For exam purposes, this is how you're going to be tested. However, in real life, they're not going to wait the entire year to get the additional income that's made off of you operating on their property. They're going to ask you to provide your sales for that month, and that would be an increase onto your rent for that month. However, let's stick to how you're going to be tested and go through this step by step. So you'll notice that you take your base rent, whatever it is for the month, they'll tell you within the question, and you simply multiply it by 12 to get your annual base rent. Step number 2 is to calculate the percentage charge on gross sales. So whatever that percentage is, once again, they have to provide this to you in the question. They'll tell you the sales you have in the year, they'll tell you the threshold, and they'll tell you the percentage charge if you go over the threshold. So we'll see that in just a moment with an example. And step 3, add the results from step 1 and step 2. And it's as simple as that. So let's see an example of how this works. A retail business rents a space in a mall. The lease calls for a base rent of $5,500 a month plus 4% of annual gross sales that exceed $450,000. If your annual gross sales were $650,000, what is your total annual rent for the business? Is very simple. First of all, let's identify our base monthly rent, which we know is $5,500. And they want us to calculate annual, so you simply multiply by 12. Very easy. You take 5,500, simply multiply by 12, and you find out that it's $66,000. That's what we're going to plug into here. Okay, so that's our base annual rent for the entire year. Now let's focus on the percentage charge on our gross sales. What are the total annual sales for this business? We know it's $650,000. And we know the allowable sales threshold. They said if you exceed or go over $450,000, which we can obviously see that we did, they're going to charge us a percentage on that difference. What is that percent? Once again, it's 4%. So let's start with identifying how much more did you sell within the year. 650,000 minus 450,000. That's $200,000 more you sold within the year. And they mentioned they're going to charge us 4% on that overage. So all you need to do is multiply by 4%. Just so we're clear on this, 4% is the same thing as 0.04. If you want to convert it to decimal to make your life a little bit easier, then you can go ahead and do so. So you can take this total sales of 200,000 and multiply by 0.04, and you find out that we have an additional rent for the year of $8,000. Now, the last step is to simply add. You're going to add the results from step 1 and step number 2. Step number 1, we got total annual rent of $66,000. We're going to plug that in here, plus $8,000 additional rent because of our sales within the year. You add these two figures together. We already have $8,000 in our calculator, so we simply add $66,000, and that's going to give us a total annual rent of $74,000. And this would be our answer. It's as simple as that. Let's go ahead and clear this out and focus on rent owed for a variable lease. Variable leases are pretty common for commercial shopping centers, for instance. Could be used for various types of properties. It is a structure of lease that could be used within our business. Everything is negotiable, of course. And there's only two simple steps to solving this problem. You have to remember the formula and be able to apply it for exam purposes. Once again, you cannot bring notes with you to take your state exam. So what is this concept of a variable lease and how does it differ from a percentage lease? It's where your rent could vary, hence the name. Usually they charge you, once again, a rent per square foot, and they can tie this rent per square foot to a market rate, whatever market rate they choose to, but typically they tie it to CPI. Now, what does CPI stand for? It stands for Consumer Price Index. You might have heard of this, but it's essentially a basket of goods and services to measure inflation in the U.S. economy. So essentially, if the CPI increases, then your rent is going to increase. If the CPI comes down, your rent stays the same. So you start with an original rental rate, and it either can go up year by year, or however they make these adjustments. Of course, everything is negotiable, or it will remain the same. So let's see an example here. A business has a 3-year variable lease for a suite in an office building. The first year of the lease calls for a rent of $25 a square foot based on an index market rate of $190. The index increases to $200 at the beginning of the second year. What is the new or adjusted rental rate? We start by taking the new index, divide it by the original index, and index is referring to that market rate, which they identified within the question, and then you simply multiply it by your original rent. This will give you your adjusted rental rate for that rental period until it's adjusted once again, and then we'll repeat this all over. So what is the new index? We know it's 200, and we simply divide it by the original index, which is 190. Go ahead and do the math. We take 200, divide it by 190, and we get a long number. Whatever result you get in your calculator, keep it in your calculator because we don't round until we get to the end. Obviously, we're going to be talking about money here, so eventually, at the end, we're going to round to the nearest cent, but we're not quite there yet. So now we take the rate in our calculator and simply multiply it by our original rent. $25 is the original rent. So now we multiply by 25 and we get an adjusted rental rate. Remember, now we can round to the nearest cent. We got $26 and 0.315. Of course, 5 is going to make it 32 cents. And this would be our answer for exam purposes. So congratulations. Now you know how to calculate a percentage and a variable lease for exam purposes. If you have any issues with practice questions, come back to this video, watch it again, and you will get the hang of it.